So, has that neighbor reached your last straw? Or maybe you're wondering, I need a little bit more space. I love my neighbors. I just need a little bit more space. Or maybe you're just upset with the current state that you're in and you're thinking about moving to God's country, Oklahoma. Well, this video is going to be the ultimate home loan guide if you're getting ready to move to Oklahoma City, Oklahoma. And we're here with Tom Rosser of Gateway Mortgage, who's going to answer some of the top home loan questions to give you the ultimate home loan guide. Tom, thank you so much for joining us today.
Josh, thanks for having me, man. I'm excited.
Man, Tom, one of the biggest questions, I'm just going to go in order. These are all important questions to provide the consumer who is watching this video, which is you. You're watching this video. We see you. All the information they need when it comes to getting a home loan here in Oklahoma. So you know the preference of it. The biggest question that Google says, one of the biggest questions that Google says is they need to get a pre-approval because it's more important than a pre-qual. Can you help us understand that a little more?
I can, Josh, and I'd be anxious to hear, your side of that, what you feel the difference is on a pre-qual or pre-approval letter if you see an offer with one of those two things. But to tell you the difference in my world, a pre-qualification letter is based on what someone has told me, and a pre-approval letter is based on what someone has shown me.
Okay. No, I really appreciate that, Tom, and I have to deflect the question or circle back with you because I whatever I get with an offer when I'm helping a seller sell their home, whatever I get is I don't pay attention to the difference. I don't. I call the lender and I asked him, "Hey, have you verified income, pulled their credit, and have they turned in their docs?" And 9 times out of 10, people are telling me yes, except if it's not someone local. But every time I get one with Gateway's name on it from your office, we know not all Gateway offices are the same. But when I get one with your name on it from your office, I usually don't have any concern. I still reach out to you guys and verify it because that's part of my job. But I don't ever look for the difference. I call the lender to speak to them. Does that make sense?
I love that step that you take. I think that's a great step. And hopefully, you're working with reputable lenders. They tell you the truth on all of that. But generally, if somebody calls me in a hurry, Josh, they didn't know this house was going to go on the market. And so maybe they didn't have time to get me all the documentation I need for a full pre-approval. But what they've told me and they're confident in it. Now, to get a pre-qual letter out, I have to check credit. So either one of those two letters, I'm going to have credit on them. But on the pre-approval letter, the difference is I've seen their income documentation, their pay stubs, their tax returns, their W-2s, if all that is required. And I have seen their asset requirements, bank statements. If they're going to be required to bring money to the closing, I have verified that. So a pre-approval letter is stronger than a pre-qualification letter. A pre-approval letter sometimes can take more time. So let me go back to the beginning where someone might call me and, they call me on a Thursday at 5:30 and they say, my neighbor's house just went on the market. I've loved it since I've seen it. I want to buy it right now. At that point, I can check their credit and if their income is straightforward, we can issue a pre-qualification letter. Now, that's just kind of a rushing through it, right? And if you were to call me then and say, hey, Tom, have you verified all their documents? I would say, Josh, I haven't, right? But ideally in that same situation, I send a pre-qualification letter out and I give that home buyer a lot of urgency about getting me some documentation first thing in the morning or even later that evening so that, hey, if the listing side calls me, I can tell them I've seen your income and I've seen your assets and everything's great.
Wow. Okay. That's really helpful, Tom. So for our customers out there watching, our future customers out there watching, pre-approval is better or more verified than a pre-qual.
Correct.
Okay, cool. Another point that's important that comes up that Google says is important is there a best down payment amount when it comes to getting a loan?
Kind of depends on the loan program. We'll say that up front, right? It depends on the loan program. But you get
Right there. We hear you right there.
Okay, you get rate benefits. Sorry about that. You get rate benefits with a higher down payment most of the time. So your requirement might be 3% down, but you get a better rate if you do 10% down. And then an even better rate at 15 and 20% down. Now, you stop getting benefits around the 40% down mark. So if I were to answer your question, is there a best down payment amount? You're going to get the most benefit from a 40% down payment on a home. That's going to result in the lowest rate. But not many people want to put 40% down on a house. So to answer the question, 40% down would be ideal, but 40% down is rarely required a down payment.
Okay. And every person's individual situation will be different. So
Absolutely.
So
loan
sometimes,
program, credit score, down payment, all those things are going to play, be a factor.
Okay. Is there, you just mentioned credit score. Another question that comes up is there a benefit in different credit scores compared? So for example, like a 680 compared to a 700, is there any financial benefit to a difference in those scores? Like, should people wait 2-3 months to raise that credit score? Or is it more along the lines of they're going to get the same thing pretty much? It's not really worth the wait.
I would say it's not worth the wait in this market because the market is so volatile that you might wait to get your credit score up in 3 months. And then for whatever reason in the market, that rates went up in that 3 months, right? So to me, the wait is there's a risk in waiting for sure. But there are definitely benefits to having a high credit score. So let's use 600 as a score. Most of the time we need a 600, a 580 on some loan programs to qualify. So that just gets you the qualified credit score. And then every 20 points after that, you're going to get a little benefit to your interest rate or to the cost to get that rate up to about 760. So 760 and above kind of is top tier to us, right? So if you have a 761, it kind of be the same as having an 801 credit score for us. But credit score definitely it benefits your interest rate if you've got a high credit score. Okay. Some loan programs, I should say that some loan programs are pass fail, right? Score doesn't matter. You either pass or you fail.
With that, I'm just curious, is that like a VA? Is VA pretty much you qualify or don't qualify?
There's some little interest rates hits on VA and FHA. But yeah, you can, some of those loan programs, you don't have them. So yeah.
Okay. Another big question that consumers have, because this is the ultimate loan guide for Oklahoma City, Oklahoma, is the affordability of a mortgage payment compared to what you're actually approved for. And to preference this or to frame it a little better is, let's say you qualify someone for a $250,000 house, but the payment is, $800 more than they want. Just because they're qualified for a $250,000 house doesn't mean they have to go buy one. And do you consult people on what can you actually afford compared to what you're actually approved for?
We do consult people for sure. And it's a very, very common question. Every time I ask you, hey, what is your ideal monthly payment? Lots of times we'll correlate to rent, right? What are you paying in rent right now? So if you're paying $1,800 in rent, or your current mortgage payment is $1,800, and you're comfortable with it, but you might qualify for a house payment of $3,000 or $4,000, right? So what you're comfortable with is a very important question that we do counsel people on for sure. I'm also not going to stop someone if they want to invest in if they qualify for a mortgage, I'm going to help them get their mortgage, Josh. I hope I said that properly or the right way. But yeah, I think sometimes we get asked the question, what is the max that I qualify for? And a lot of times I'll say, hey, here's the max that you qualify for. But I'm not sure that's the best question. I think the best question might be, hey, Tom, I want my monthly payment to be $3,000 a month. What price range should I be looking for with this down payment?
Yeah, exactly. Because, guys, what Tom and I want to make sure all our customers are aware of is you don't want to be house broke. You want to be able to go on a couple of vacations a year. You want to be able to maybe go get a new car after you purchase a home. Don't change anything financially when you're going through the purchase process, but maybe after you get a new house, you want to go get a new car. So factor in, like Tom said, what's affordable compared to what you're approved for. And if you just want to go for the hilt, go for everything you're approved for, then Tom's got those numbers for you also. Tom, this is straight from Google. People have these questions. This is the ultimate Oklahoma City home loan guide. These are questions that come up. How many different mortgage types are there?
Oh, how many different mortgage types? We offer probably in the 10s to 20s different mortgage types, right? Because you can get the main ones with conventional FHA, VA, USDA, and then you can add in, there's little bitty loan programs inside of each one of those. You've got construction lending, you've got rehab loans. There are many, many different types of loan programs, right? We have bank statement loans now. We have debt service relief loans, right? We're coming out with new loan programs all the time, Josh. So in actual, how many different types are there? We mainly work in about 5, but there's 20 to 50 mortgage types out there. I mean, little bitty different loan programs for people.
I'm really glad this question was brought up today. When people are in an industry that's not federally approved, but they are in an industry that's state approved, does Gateway Mortgage have an option for those businesses? For example, the marijuana grows?
We do. So we've got that's another one. That's a good question. I think we call it cannabis marijuana related business, MRB, marijuana related business activity is the loan program that we have. We are allowed to lend to employees of marijuana related businesses as long as those employees are W-2'd and taxed. If you own those businesses, I cannot lend to you. I can lend to your employees. So that's a good example of just, we saw kind of a need in Oklahoma, right, where there's more cannabis, every day it feels like they're opening new businesses. I guess there's a moratorium on them right now, but they were. And so we came up with a loan program that we, where we can help.
With you mentioning being an employee and not owning the business, my CPA structured my business as an S corp. I own the company, but I'm also a W-2 employee. Would I, if it were a cannabis business, not real estate business, would I qualify as a W-2 employee? Or since I'm also the owner and the W-2 employee, would I not qualify?
So I'd have to go ask an underwriter about that to get into the details of it. My thoughts would be I would not be able to lend to you. And if I was able to lend to you, I would only be able to use the wages that you pay yourself, not the actual, the business income, which can be a bigger chunk than maybe, your W-2 wage. But yeah. I would guess that because you own that business, that's the risk that we didn't want to take, right? The ownership level of that business. So I would say we'd probably say no.
Okay. No, that's good. And as the W-2 employee, Josh, I don't think he'd qualify for a loan.
Right.
He doesn't get paid enough. He ain't a good employee, that dirtbag. I'm the owner. I want all the money.
Yes.
Number 6. When people, the 6th biggest question for the Ultimate Home Loan Guide in Oklahoma City, Tom, is when people buy a home, and let's say the Fed, for whatever reasons, let's say bank failures, a $32 trillion deficit, for whatever reason, let's say he decides to reverse course on interest rates and he starts doing point reductions, and that slowly trickles down to the mortgage market, and rates start to, all theoretical, just hearsay, rates starting to loosen up a little bit. How long after someone buys a home would they be able to refi?
Right away.
Wow.
Right away. I mean, yeah, you can take advantage of low rates. I mean, we will look at every situation and tell you if it makes sense for you to refinance, right? Now, if you want to refinance the day after closing, I don't know why you wouldn't be able to do that. I've never had someone do that, where we might say, hey, they're dropping right now. Let's watch it a little bit longer to see if they continue to drop. But we wouldn't stop you from refinancing. We've got a refinance program right now that's called the Rate Relief Refinance Program, where we're doing no lender fees on refinances for homes that we close right now. There's no lender fees on refinances for 3 years.
Wow. Wow. Now, is that something during the application process that they need to sign up for? Is that something they need to make sure is in their actual mortgage agreement? Or is that just something that's, at this time, it's a product we offer, but, tomorrow things may change?
No, so it's in our closing packets for every closing right now. That you are entitled to this. I think there's a rule in there or some sort of guideline or whatever that you have to mention it, right? So let's just say you close today at ballpark 6.5. I don't know, right? You close at 6.5 today. In 2 years from now, let's say 1 year from now, it drops to 4, and you refinance. When you apply 2 years from now or 1 year from now for that refinance, I think the rule is like you have to say something to us of, hey, I want to use this rate refinance relief thing.
Cool. No, that's great. And guys, all the numbers that we throw out, it's all up to individual credit scores with approved credit, all the terms and conditions apply, and all those disclosures that we have to put out for equal housing opportunity and all that stuff. So we're just giving you an example. Everyone will be different.
We got to cover compliance there.
Yeah. Yeah. We don't want them on our backs. So what are the different costs associated with the payment? Because when you make your mortgage payment, it doesn't just go to the mortgage. Like what's a real quick summary breakdown of those costs in that itemized in that mortgage payment for just, let's say, like a 5% $400,000 conventional loan?
So I love the question because it can be kind of misleading on the internet sometimes when someone calls me and say, hey, no, I saw on the internet my payment's going to be this. Well, that's usually one portion of your payment. So most of the time you're going to have 3 portions of your payment and potentially a 4th or a 5th, right? But the biggest piece of your payment most of the time is your principal and interest payment. That's the actual paying back of the loan and the rate and the term that you owe. The additional piece would be homeowners insurance, right? So that would be, whoever you use for insurance. Usually whoever has your car is going to want the house, or whoever gets the house is going to want the cars. And then a third part would be property taxes, right? So you're going to pay property taxes to the county that your home is in. A fourth part, and it's not usually included in your monthly mortgage payment, but it is a kind of a cost associated with your house each month, would be an HOA dues, right? What other ones can you think of that you would add in there, Josh?
Did you do the mortgage insurance premium?
Did
you already say that one?
There. Lots of loan programs, right? If you don't have 20% down, you're going to have a mortgage insurance premium. Some loan programs, that's going to be the life of the loan. Some other loan programs, it's going to drop when you do hit a certain loan to value number.
Okay, so interest and primary, taxes, insurance, and mortgage insurance premium.
Correct.
Okay, cool. And then possibly an HOA, and then the mortgage insurance premium will possibly go away when the loan gets to 78% value.
Automatically drops at 78. You're supposed to call us at 80. Yes, we're dealing with a lot of that right now with the way that homes have appreciated over the past couple of years, right? People getting to that mark a lot faster than their amortization schedule shows them they will.
I hear that some departments have been giving people a little bit of pushback over appreciation rate compared to actual sales price and loan value. Is it a streamlined process? So does appreciation count?
Yeah, there's truth to that, Josh. So, it's not super simple, right? Where you say, hey, I just looked up online, or, this is what my house is worth, drop the mortgage insurance. It's not that simple all the time. Lots of times we will do what's called a BPO, a broker price opinion, and that's a third party that's going to cost some money. And then we use that as value. We can take it a step further and do a full appraisal in some cases, right? And then we can use that as value. But it's not always as simple as, hey, my neighbor just sold their house, and so now mine's worth this. Please drop the mortgage insurance. It's not always that simple.
Okay, so there's a little bit of paperwork involved, but when it comes to 78% of the original sales price compared to the loan value, not including appreciation, when it gets down to 78%, the computer will automatically flip the switch.
Correct.
Okay. Oh man, crazy stuff. This is amazing information, Tom. We really appreciate that. If you're moving from Florida, if you're moving from Oregon, if you're moving from Washington, New York, guys, Tom's info is down below. If you've got loan questions, you want to reach out to him. You want to give him an information. Write that number down. Even if you're not thinking about it right now, in 6 months, who knows? Who knows? Write down Tom's info, 405-751-3800. Write that down. Put it on your refrigerator. Put one of them magnets up there. Put a smiley face on it for when you move to Oklahoma. And even if you're not moving from one of those states and you're living in Oklahoma and you just had enough with your neighbors, write that number down so you can talk to Tom about your financing. Because before the agents that I work with and I go look at houses with you, you've got to get the finances in order. You've got to get them in order for sure. So, Tom, a big question that comes up too, that sometimes people are like, what do you mean? What do you mean I got to pay for an appraisal? Do all loans have to have an appraisal? And then kind of, what is the appraisal for?
Okay, so let me start with the first question. No, not every loan has to have an appraisal.
Okay.
We've getting more waivers. I guess they kind of just changed the name of it, but it was called an appraisal waiver for a long time. The big agencies have been aggregating data on property values for years, and so we run everything through an automated system, and the automated system gives us feedback on whether or not we need an appraisal. So lots of times it can be someone with a big down payment, and they say, hey, we don't need an appraisal because that loan to value is so low, it's fine. Lots of times they just have a ton of data on that area, and they'll say, hey, we agree with the value as it is stated in the contract, and we don't need an appraisal. So that's kind of most of the time we need one, but occasionally we don't have to have an appraisal. Now, what an appraisal is for is to tell us the value of a property. Number one, it also gives us some information on the condition of the property as well. But it compares other homes like the home that you're buying, and what those homes have sold for, what amenities those homes have. They give you some adjustments based on, maybe this house has 5 acres and the one that you're buying has 4 acres. Or maybe this house is 4,000 square feet and this one is 3,700 square feet, right? They make little adjustments for that to tell us the value of the home.
Wow. And on the backside of the loan too, to sell it to the government who used a 30-year mortgage to create debt slaves, you've got to have that. Is that right?
Most of the time, yes, that's correct. That's a good yes.
Number 9, and this is the last one, guys. So I hope you still got a little bit of popcorn left because Tom and I really appreciated this time with you guys today. For all your real estate needs, don't hesitate to reach out to us so that we can help you with your home loan or your real estate needs. Last question, Tom. Does making a little bit larger payment every month actually matter? And then let's talk about 3-year, 5-year, and 10-year. Let's talk about, does it matter making a little bit extra for 3 years? If you're going to stay there for 3 years, does it matter if you're going to stay there for 5 years? Does it matter if you're going to stay there for 10 years?
Yeah, I think it matters. I think it's helpful, but I think that goes into everybody's individual budget and what they can afford each month. There's a kind of if you make one additional payment every single year, right? One additional principal and interest payment every single year, it can cut 7 years off the term of your mortgage. Now, depending on, and that's some rough math, right? But depending on where you are with interest rates, 7-year difference on payments saves you a ton of money on interest. So I think it can help. I think there's several ways to do that, right? We have people that'll do biweekly payments. So your payment is You just you make the payment every 2 weeks. So you end up making 26 half payments, which is 13 full payments, right? There's one way to do it.
Yeah, 1 month extra. Mm-hmm.
There's 1 month extra, right? You have other people that'll just take the principal and interest every month, divide by 12, and they're going to pay that little bit extra every single month. That ends up paying an extra payment every single year. You have people that just say, hey, when I get my bonus, I'm going to put it towards the principal of my house. Or when I get a spiff, or, whatever, some sort of extra income, I come into some extra income. I have a garage sale and I come into some cash. I'm going to put it towards the principal of my house. So yes, that can save you interest over the long term, but it is going to be based on everybody's personal budget.
That's some good information. And golly, I had a question come up while you were talking that was in relationship to that. Oh, I know what it is. Gateway has a product. If people want to see or want to use this particular product, but I believe Gateway has what's called loan reamortization if they put a larger down payment at some time, like if they get a big bonus. Can you educate us a little bit more on that if I'm right?
Yes. Yeah, you are absolutely right. And the term we use is called recasting. So it's recasting your mortgage. Most common, we see it right now, are people that buy their second house before they sell their first house. So they have a really minimum down payment when they buy. They sell this house and they make a chunk of money and they put it towards the new house. We will re-amortize the loan. Now there's some guidelines in there, right? It has to be at least a 10% reduction in the principal. So if you owe $400,000 on the house, for us to recast, you've got to come up with 40 grand, right? And then we will recast it. The rate does not change, but the monthly principal and interest payment does change, right? It's just re-amortized with that down payment reduction. It's a great program.
And that's really good information. A question that I've never thought of until now is, what if they're like 5 years into the pain and they take advantage of this program? The recast doesn't extend the loan an additional 5 years, does it? It just adjusts the payment amount.
Correct. Principal and interest term doesn't change. If you're on a 30-year term there, you still owe 25 years.
Okay.
And we definitely have people do that. So we've had somebody that they did what we talked about, right? They sold their first house and then applied a chunk of money, and then a couple of years later inherited money, right? Had a family member pass away and they inherited a chunk of money and they did that recast again. So you're not limited to one recast. But
you are limited to one per year?
I don't think that's one per year. I think as long I've got to go look at the guideline again, but I think it's, if you've got the money, we will recast it.
Wow. That's some great info. That's some really great info, Tom. That was all of Google's top questions so that we could educate our current customers and future customers for the Oklahoma City metro area when it comes to home loans and home financing needs. Is there something else that has come across your desk over and over and over again that you think would be good value add to the consumer's education to home loans in the Oklahoma City metro area, Tom?
No, come move to Oklahoma. Great place to live.
Yeah. It's definitely, they've got some great highlight videos on the Visit OK YouTube channel. Do you ever watch the Visit OK YouTube channel, Tom?
I've seen it just because of, yes, I have.
They go to some cool places, man.
They do. And a bunch I've never been to. I've lived here a long time.
Yeah, they make them look really cool too. Some of them places I've been to, and I'm like, I see what angle they're using.
Yeah. Well, we make home lending look cool, Josh.
It is cool. Well, Tom, really appreciate all this value. Our consumers, our customers, our future customers out there, subscribe to the channel if you haven't already. Give this video a big thumbs up so that other future home buyers needing a home loan know that it's a great video. And for all your Oklahoma City home financing needs, don't forget to reach out to Tom and his office there in Edmond, Oklahoma, Gateway Mortgage in Edmond, Oklahoma, so that they can help you.
Josh, thank you, man.
See you, Tom. Have a good one, guys.